Okay guys, let's face it, the crypto market has been extremely boring for the past couple of months. So that's why I decided to come in and entertain you guys with a new series where I will take 1000 USDT and I will use the 1000 USDT and try to grow it to as much as possible by only using out of the box trading bots that are directly available on ByBit. So the way that this is going to work is I have about 1,999 USD available, and I'm going to use this to create multiple trading bots directly here on ByBit, and I will show you guys exactly what settings I'm using, what bots I will be setting up on what pairs, and I'm going to show you guys everything with the goal to grow it as much as possible. And I'm going to try to update you once a week. For this first episode, we're gonna keep it very simple so I myself and you guys can get a hang of this challenge. So in this video, I will just have a look at Bitcoin. I will check out the broader trends Bitcoin is trading in, and I will try to set up the first bot directly on Bitcoin. So what I like to do, I'm a very technical guy, is the first thing I always like to do is just look at Bitcoin, because Bitcoin obviously directs and dictates the entire market, and just see where Bitcoin is currently trending. The time frames that I prefer are a daily, 3 daily, and weekly. And for right now, I think the 3 daily is like the perfect time frame to just get a very good picture of Bitcoin. Now, if we draw very simple trend lines, we can very quickly spot that Bitcoin has been trading downwards for quite some time. In fact, if we look at it, we can see Bitcoin has been trading down for about 213 days. So that's a bit over about 7 months. So we can see Bitcoin is in a downwards trend. What I then like to do and combine this with are liquidation pools. So if you don't know about liquidation pools, these are basically levels where lots of liquidations will occur if the price is hit. Let me give you a very quick example. Let's switch to the simple Bitcoin and go to the yearly time frame. Now, if we look at this and we check out the 50K area right here, you can see once the ETF went live and Bitcoin had its initial surge, we can see that we had lots of support right around the 50K area. And lots of people obviously thought, well, okay, I'm gonna make a long position because I think Bitcoin will go further up. And in case it goes down, I will be liquidated right below this price. So this is exactly what a liquidation heat map in this case and liquidation levels will show you. It basically shows you whenever a specific price is hit, how many people's positions will get liquidated. In this case, right around the 50K area, we had enormous amounts of liquidations, and you can obviously see how these liquidation levels kind of act as a magnet from time to time. So you can see lots of liquidations here, and what happened? Well, Bitcoin dumped, and where did it dump to? It dumped exactly to those liquidations to liquidate all the people's positions. And this is what I like to look at, because liquidation levels will give you like a good hint of where the market could go to and where we might potentially see a couple of wicks happening. So just so the market makers can grab a lot of fees. In this case, we can see a big liquidation level around 50K, which has already been erased, but I'm just gonna draw it on the chart again so we can see that this was a very big liquidation level. If we look on the other side, we can see we have lots of liquidations around the recent swing high, around 67K. So I'm gonna draw this again. It's right around the swing high right here. Then again, the swing high before that, around 70K, we have lots of liquidations again. And then, obviously, to no one's surprise, right around the all-time high, around 72, 73 to 74,000, we have again lots of liquidations. So again, we are combining the downtrend channel with the liquidation heat map. And now what I'm gonna do is I'm gonna try to look for a price range, a price area where Bitcoin has been trading in for a very long time. So what I like to do is I always like to look at the recent resistance that we just tested. We can very clearly see that a couple of days ago, we wanted to test this liquidity pool, but we saw a big rejection off of it. This is what the red candle in this case shows you. So what this tells me is that right around this area here, right around $65,500, there's lots of resistance, right? And now I'm going to look for the other end. So on the support side, I think it's actually very simple to spot, but right around all these wicks down here, we have lots of support. So I'm going to say right around, like somewhere around $55,000 to $56,000, there's lots of support. So right around here or here, there's lots of support. And if you look at this now, this is a very good grid range. Why? Because within this range, Bitcoin has been trading. So the last time it broke down or above this range and it actually closed there was right around here. So the 29th of July, which means that Bitcoin has been trading in this range for a little over 2 months. In my personal opinion, the longer Bitcoin has been ranging, or any crypto in general, the more convincing the grid bot will be. So in this case, I think this is a very, very solid setup. Now that we've spotted the overall trend and we've spotted the grid range, the question is this going to be a long bot, a neutral bot, or a short bot? What I like to do is actually very simple. Well, first of all, regardless of whatever we set up, we need to find a stop loss and a take profit. What I like to do, generally when setting up grid bots, is first of all, I want to round the ranges to a little bit of more like beautiful numbers. So we're going to do 665,550. And for the low end, we're going to do, well, it's already a pretty good number, 54,850. And why am I doing this? Because for the take profit and for stop loss, what I like to do is use an indicator that is called the average true range. So you can go to indicators, type in average true range, and just use the first one. In my case, I've already have it on the chart. It's this red number down here. The average true range, in case you don't know, shows you how many dollars the pair that you're looking at is moving on the time frame that you're looking at. And what I like to do is look at the daily, and now the daily is telling me, okay, well, Bitcoin is moving about $2,200 per day. And I'm just going to round it down to about $2,000 per day. And now what I'm going to do is I'm going to take a look at my lower end, and I'm just going to copy this line, and I'm going to subtract $2,000 from this. So just do this and paint it red, and this is the stop loss. And then for the other one, we're going to do the same. It's 65,550. Just going to increase it by 2K, and this is going to be the take profit, or depending on if we set up a long or short bot. So what does this do now? Well, it just makes sure that between the upper end of the range and the lower end of the range, there's a bit of space in between. For example, in this case, we obviously want to close the bot not when this exact wick is hit, but a little above, and then the same for below. So what I like to do is we're gonna simulate setting up a long bot. So we're gonna start it right here. This will be our stop loss. This will be our take profit. And if you've watched any of my previous videos, or you even watched my course, you will immediately know that I would never set up this bot. Why? Because the risk to reward ratio is 0.64. It's below 1. I always want to have a bot on end trades where the risk reward ratio is above 1. So in this case, if I still want to stick to my conviction of a long bot, I would actually wait for the price to drop so I can have a higher risk to reward ratio. However, In this case, we already have a bigger downward trend channel. So what if we go ahead and we set up a short position right here? Well, if we set up a short position, you will see we have a risk to reward ratio of 1.56. And this is what I like to see, because this means we are risking less than what we can possibly make. And for me, this analysis completes this research, and I'm definitely gonna go ahead and set up the spot. So how does it work? Well, very simple. We'll go to ByBit, start off with a futures grid bot, and then just go to manual and short. And then we'll go ahead and enter the price range. So what would you say? 54,850, and upper range is 65,550. Next, what we're gonna do is we're gonna use a leverage. And it's always a bit difficult to calculate how much you will lose when the stop loss on a grid bot is hit. So what I like to do is calculate from the price where we start the bot to our stop loss, how many percent the price would need to change, which in this case is about 9%. And then you want to calculate this number with a number so that it gets up to 100. So if we multiply 9% by around 11, you will get to around 100%. So if we use an 11 leverage, what this basically does is whenever we start the bot and the stop loss is hit, we will lose almost our entire investment. And this makes it very simple for us to calculate how much we are risking whenever we set up a grid bot. So in this case, we're going to use an 11 leverage. As for the grids, I like to use geometric because then the profit per grid is always the same. Makes it a little bit easier to just guesstimate how much profit you will make. As for the profit per grid, if you know me and my videos, I like to go for about 0.5% profit per grid. So I'm just going to increase the grids and try to get to around that number, which is around 60. Let's do 61, 62. Yeah, would be around 62 grids. Now the problem is, with these settings, we need to invest a minimum of about $500. Well, I'm not crazy, so with 1,000 USDT starting capital, I'm obviously not going to create a bot risking half of my portfolio. In this case, we want to start off very slow, very simple. So we want to risk about 100 US dollar. So how do we do this now? Well, you can do two things. Either increase the leverage, because then you require less money, or because leverage increasing in this case is not the best thing to do, because you would just get liquidated sooner, we're going to just go ahead and decrease the number of grids. So if we do 10, for example, you only need $80. If you do 15, 120. So it has to be somewhere in between. Let's do 12 grids. With 12 grids, we can start with $100 only. But this obviously results in very, very few grids and a high profit per grid percentage. So if you look at our range is about $10,000 to $11,000, which means with 12 grids, you would get one grid about every $1,000. Since Bitcoin moves about $2,000 per day, with this setup, with this number of grids, you can expect to make around 2 trades per day, which obviously is not a lot. But what I'm always trying to tell my students is that it really doesn't come down to how many trades you have. It just comes down to how much profit those trades are making. So if you have 50 trades and they make 1% together, or you have one trade and you make 1%, it doesn't really matter. Most of the time, less trades is actually better for the psyche. But in this case, there's, well, nothing we can do anyway, so we'll just stick to the 12 grids. Then, of course, we don't forget about the stop loss. Stop loss is about 52,850. And the take profit is 67,550. Well, we obviously have to switch this. So the stop loss is obviously the number that is up, and the take profit is the number that is down. So this is the profit, and this is the stop loss. We don't need an entry price since we want to start the bot right away. Again, we're gonna check all the settings. $100, the range 54,850 to 65,550. It's the correct one. We have take profit $2,000 below, stop loss $2,000 above. Perfect. So we will confirm this and go ahead and start our series off with the first bot, which is a futures grid bot, short futures grid bot on Bitcoin. If you have any questions, feel free to leave them in the comments below. I'm going to try to answer all of them. And then we're going to see each other next week. Bye.